We're rolling. Welcome to the REI Rookies Podcast, Real Estate Investing Rookies Podcast, episode number 107, where we invite you to follow us on our journey towards financial freedom using the power of real estate. I'm Josh Koth, and Jack Haas is off hiding his Easter eggs right now. Here at REI Rookies, we believe in a couple of key principles. Number one, the best way to retain information is by teaching it to others. And number two, a rising tide lifts all boats. We're not competitors, we're a community. So let's get into some real estate investing. All right, guys, we're going to go back a couple months here. It's funny, they're talking about the weather, and it's about how below zero it's going to be. So I believe this was recorded a couple months ago, and it was super cold, and Jack interviews Tim Bratz. And there's a lot of great content about commercial investing, wholesaling, multifamily, and a nice healthy dose of mindset material in there as well. So check out Jack interviewing Tim Bratz.
Well, thanks for joining us. We have Tim Bratz on the call, and Tim brings up some great new information because we typically focus on single-family homes. We have covered multifamily, but Tim has quite a bit of experience in commercial. But Tim, I'm probably going to just have you kind of break it down for the listeners. Can you give a little information on your start and how you got into this?
Yeah. Well, first of all, thanks for having me. Appreciate all the value that you and Josh bring to the table and on the REI Rookies podcast. So thank you for being here. Super honored. And excited to share whatever I can here. So I come from the residential realm. I know that's a lot of what you guys talk about. And so I can very clearly tell you and you know how my transition all took place. I was going through college 03 to 07 when the market was going gangbusters, the last big real estate push. So when I was in college, one of the things that motivated me was making money. And somebody said, if you want to make money, get involved in real estate. So I ended up moving out to New York City. I'm from Cleveland, Ohio, originally, Midwest guy, and moved out to New York City and got a real estate license as a commercial real estate agent. So I would represent landlords looking to market their retail or their office space, or I'd represent a business owner trying to open a business or open a second location or open a 10th location. And so when I was up there, I really got a good idea of and a good feel for investment real estate. I remember brokering my first transaction was 400 square feet in Manhattan in the Greenwich Village area. And 400 square feet, we signed a lease for $10,000 a month with a 4% annual increase. And as a 12-year term. And if you do the math on that, it's almost $2 million that this landlord made over the course of, 12 years for doing something at one point in time. And that was from one 400 square foot space, not to mention they had 7 other retail spaces and like 12 or 15 stories of apartments above it. And so, looking at doing the math on that, I quickly realized I was on the wrong side of the coin. I needed to start owning real estate instead of brokering real estate. And ended up making a move down to Charleston, South Carolina, just kind of better quality of life, wanted some good weather. And so I moved down to Charleston in 2008. And that's right when the whole market shifted, right? And so good thing I was just in this analysis paralysis phase that probably a lot of people go through where you think you need to learn everything before you can ever buy a property. Mm-hmm. And after the market had all shifted, I realized the only way I was going to learn how to swim is by jumping in the water, not about reading it, not by reading it about it in the book. So I found the cheapest house on the MLS, which there were a whole bunch of cheap ones, but the cheapest one was $25,000 in the entire MLS. And that was good. The only problem was I didn't have $25,000. So I tried to figure out where could I get the money. The issue was nobody was going to lend some punk 23-year-old kid, a bunch of money in the worst housing economy in 80 years. And I've never done a deal before, and I don't know what I'm doing. So I ended up calling up my credit card company, asking them to increase my credit limit. And I asked for $100,000. They said absolutely not. And then they gave me about $15,000 though. And so I went and used a balance transfer check to buy my first single family house. It's actually a duplex. Bought it, fixed it all up, knocked on all the neighbors' doors, held an open house, got one of the neighbors to end up buying it for $33,000. And so after all expenses and closing costs and everything, I netted around $13,000 or $14,000 on that first deal. Mm-hmm. And I was hooked. I was like, I don't even know what I'm doing. So let me go do it again. So I did it again. And then I got heavy into wholesaling, and
Sure.
eventually from wholesaling, you start meeting people, the buyers who are moving and shaking. You start talking to people and letting them know that you're making a living wholesaling. And what naturally occurs from wholesaling is people will say, hey, listen, you obviously know what a deal looks like, but I would buy this off you. The issue is I either don't have the time or I don't have the resources or whatever, but I have the money. So why don't you go do the work? I'll put up all the money and we'll figure out some equitable split. And that's what I ended up doing. I ended up partnering with people and giving up, probably 50 to 70% of my first 200 deals that I did all went to my private lenders. But I realized I needed to, build up a resume. I need to get some deals under my belt so then I can go posture up with more sellers, and I could posture up with lenders and banks and all those other different resources and professionals. And so that's what I ended up doing, and fell into apartments. I bought my first apartment building, an 8-unit apartment building, 6 years ago. This was when the market was at its bottom, and you could pick up apartment buildings for $10,000 a unit in Cleveland, Ohio.
Mm-hmm.
And so I moved back to Cleveland 6 years ago, ended up buying this apartment building. I was flipping high-end houses, low-end houses, single-family rentals, fell into this 8-unit apartment building. And after that first year, I looked at my profit margin on everything and where was I making the most return on my time, return on my investment. And it was in the apartment buildings, or specifically my rentals when I was flipping cash flowing properties like turnkey houses or apartment buildings. And I realized that I'd make the same, percentage of margin on the flip, but when you calculate in the cash flow and what it covered on all the holding costs and the additional cash flow it kicked off, my returns almost doubled. And so, I just naturally realized that I wanted to focus on apartment buildings and partnered up with a couple of guys who put up almost $1 million. We built a portfolio of about 150 units, and that partnership ended up going south. And we had to liquidate everything about 3 years ago. And so over the course of the past 3 years, just been building my own portfolio now. So I got my own team, my investment team, built out a management company. I own property in 5 different states, Ohio, South Carolina, Georgia, Florida, and Texas right now, and looking at stuff in many other states. And I have a portfolio of 1,927 units as of today.
And you have another pretty sizable deal going on right now, right?
Well, I have several other properties under contract. Yep, closing in the next 90 days. I'll add them all up. It's about another 1,000 units. So we should be at around 4,000, maybe even north of that by the end of 2019. So pretty exciting stuff.
Wow, and you pulled this all off in like just 3 years. That's really you basically had to start over.
Yeah, the knowledge and the mindset has taken me a decade, to master. And it just goes to show that once, you go and build a big portfolio, you go and make $1 million, not for the $1 million, but for the person you have to become to make $1 million, for the person you have to become to attract $1 million portfolio or, net worth. And so it goes to show why a lot of millionaires and billionaires could lose everything. And then within 12, 24, 36 months, build it all right back up because they already have the mindset. They already have the knowledge and the skill set and everything put together. So, I've been in real estate for 10 years now and really only good at it for probably the past 3. But that first 7 years of foundation and really getting kicked in the teeth over and over and over again, it was all learning. I never quit. And because of that, you just stick with it. Like, this is real estate, Jack. I mean, like, since the dawn of civilization, wealth has been measured in land ownership. And every millionaire or billionaire you've ever met has either made their money in real estate or made their money somewhere else and then parked it in real estate. And so I knew that real estate wasn't an experiment. I knew if I just stuck with it, eventually, time would catch up and I'd be able to call myself a millionaire. And so, super exciting. And it's not an experiment. So if there's any newbies listening, or they're worried about losing money, or worried about a deal going south, or a partnership going south, or like that stuff's going to happen. You're gonna get kicked in the teeth a whole bunch of times. The only reason I'm on this podcast as a guest is because I've just gotten kicked in the teeth more times than most other people.
Yeah, we push the concept of persistent and consistent behavior. I mean, you have to keep rolling that boulder up the hill.
100%.
Yeah.
And there's many times where, you come across a circumstance. I had a 30-unit apartment building when I had that portfolio of about 150 units. It was a lot of singles, and as I was growing that portfolio, I had my 30-unit apartment building. It was my biggest apartment building in the best area. And it was like the crown jewel of my entire portfolio. And one of the tenants was mad that they were getting evicted and burned the whole thing down. And so it was like, when you come across a circumstance like that, a lot of times it's difficult to see outside of your circumstance. And, for anybody who's newer and just kind of going through that stuff's going to happen. Hey, roll with the punches. That's why God had created an insurance and attorneys and, all these other things, CPAs. There's always somebody who can help push you through whatever that situation is, where you come out cleaner and drier on the other side. And, it just makes you that much better. It just sharpens the axe moving forward, and not to make that mistake when you're earlier on. So, you could do it, kind of build a portfolio the way that I did, organically, by doing a lot of small deals and going through that learning curve, or you can partner up with somebody. And there's a lot of people called sponsors in real estate, or in commercial real estate specifically, who have been there, done that, have the net worth and liquidity, get loans, and the experience on managing and owning these large apartment portfolios or commercial portfolios. And you can lean on them. They've already been through all the learning curves. If you can get good at finding deals and bring them a deal, a lot of times they can bring the money, they can help oversee it, and you can be kind of boots on the ground in a project. And it's a way that you can kind of fast track that learning curve as well, without having to, go through the kicks in the teeth.
Mm-hmm. Well, it sounds like you've had a lot of experience, both positive and negative, when it comes to partnerships. Can you talk a little bit about that? Like, I know you had the one, it didn't seem to work out, but what are some of the thoughts and concepts that people have to kind of mental blocks that they have to get through?
Yeah, good question.
With some of the partnerships that we've seen, even, we've been chatting with quite a few people locally, they either can't get past the sharing in the profits kind of a thing, or a number of other things. Like, what do you think on that?
Good question. And it's a hot topic, especially in real estate. So when I take a look at a business partnership, just because of the one that I went through, I usually, when somebody asks me, should they partner with somebody, I kill the idea of a partnership on an overall getting married across all business ventures. I don't like that way of partnering. I think like in my situation, just circumstances change. Somebody ends up having a life circumstance, they get divorced, or they get married, or they have kids, or they realize, once they have kids, they don't need to have $1 billion portfolio. They're okay with a $10 million portfolio, and ambitions change. And so when life happens, that's not anybody's fault. It's just life happens, right? And so when life happens, though, all of a sudden there's an inconsistency amongst the partners. And in my situation, I had to liquidate everything that took me, it took me 3 years to build that portfolio of 150 units. Mm-hmm. And so for me, I don't like getting married to anybody in business. I love joint venture partnerships on a deal by deal basis. Mm-hmm. And it goes back to your point in sharing in the profits. Here's the thing. In commercial real estate, we're talking about big deals. We're talking about multi-million-dollar, if not tens of million-dollar deals, versus a single-family flip where you got to split up, $20,000 to $30,000 of profit, and that's hard to do if there's a lot of hands in the cookie jar, right? Mm-hmm. Versus a multifamily property or a commercial deal where you're talking about hundreds of thousands, if not millions of dollars of profit per deal. What's exciting about that is you don't need to be Superman or Wonder Woman and do everything across the entire deal like you do in the residential realm. I'm really good at raising private capital and at the marketing side and finding deals. I'm not so good at the operational side or the project management side. I can't stand working with contractors. The worst contractors in the world are attracted to me, and I end up hiring them all. And it's nothing but headaches on every single project that I manage. And then on the property management side, it's super important. It's just I'm not detail oriented in that capacity. So what I've done is I brought on a COO, Chief Operating Officer, to handle all of my portfolio management. And he's built up one of the largest residential property management companies in all of Cleveland, Ohio. And we're actually getting rid of all the third-party management right now so he can just focus on our own portfolio. And the guy's an absolute stud at what he does. So it's a way that now I can, and I pay him at a profit share based on a deal-by-deal basis. So, I pay him a little bit of a salary, and then he gets a profit share based on how well the company does. So it's a way that you can attract high-level talent, give them a little piece of the pie, and they're able to, counterbalance your strengths, counterbalance your weaknesses without dancing on your strengths. Does that make sense?
Yeah.
Now you take a look at any great business partnership, and there's, for every Steve Jobs, there's a Steve Wozniak. For every Bill Gates, there's a Paul Allen. And so they're very different in mindset or behavioral patterns, but they balance each other out really well. That can work in a good partnership, or you can own 100% of the business and just hire that person to balance out your weak points. And so it allows you to really double down on what your unique ability is and focus on that versus trying to be, again, Superman or Wonder Woman and do everything. So, in this respect, because you're dealing with these large deals, you can afford to pay somebody a profit share or a joint venture partnership and give them some equity in the deal. Because one, it's a deal-by-deal basis. If that deal goes south, you just sell that one. It doesn't affect the rest of your portfolio. But secondly, you can focus on your strengths. And at the end of the day, you think about it this way. You could either have a quarter of a watermelon because you could do these bigger deals, or 100% of a grape. And there's a lot more squeeze in a quarter of a watermelon than there is 100% of a grape. Does that make sense?
Yeah, that's a great analogy. We've said time and time again that it's always better to get part of a deal than no deal at all. So, the concept of the joint venturing on a property or a project just makes sense. I mean, because you're not in any worse situation as you were before. In fact, you might be moving forward. But one of the things that I think that you brought up that I find we've brought up multiple times as well is the importance of being honest with yourself and honest with your strengths and weaknesses. Because I think a lot of people focus on, you gotta get in the grind and you gotta improve your weaknesses in some way, shape, or form, instead of taking a minute and just saying, I'm not very good at this. Being honest with yourself about that and filling in the gap with building out your team or finding a partner that can do that for you. And then working on your strengths, because when you become tunnel focused like that, I think you see a lot more success.
100%. I remember reading a story about Bruce Lee, and he was in, he's a martial artist. Now he's an actor, or he was an actor. And before he was an actor, he was in martial arts and was in this like world competition for all martial artist classes. And so, somebody from jiu-jitsu would be fighting somebody from karate, who would be fighting somebody from taekwondo. And so they take every single class, they'd all compete, and they'd have one master martial artist who's like the cream of the crop and like the number one in the entire world. And he ended up winning that one year. And I remember reading an article about where they were interviewing him afterwards, and the interviewer was like, how did you become the best in the world at all this stuff? Like, did you master every single technique and every single strategy and every single class of martial arts? He's like, absolutely not. He goes, I became the best in the world at one thing, one move. It was like a leg sweep or something, whatever it was. And he goes, because I became the best in the world at that one thing, I could take down any opponent I faced because they couldn't beat me at that one move. And because I could take down every single opponent, regardless of what class of martial artistry they were in, he goes, I could beat every single person, and that's why I won. And so I remember reflecting on that and thinking, you don't need to be the best at everything. You need to be a ninja at one thing. you know, and if you're the best in the world at that one thing, think about doctors. A general practitioner doctor, they can make a good living, $150,000 a year, $200,000 a year. But if you are the best heart surgeon in the world, or the best neurosurgeon in the world, or the best, you know, whatever else, like, you can charge 7 figures or multiple 7 figures. This is how much that person gets paid because of the focus, because of the expertise that they have. And so when I understood that, and I just doubled down on what my strengths are, which again is like raising private money, putting the right people in place, and building out a really good team, it took my business to a whole nother level.
Yeah, that's some really great advice. You know, I mean, I don't want to back up on some of the things that you've said or talked about already, but one of the things that that really struck my ear is the concept, and this had to have been a huge gamble for you at the time, or at least perceived gamble, is that you essentially used a credit card to buy that first deal, right? You a check from the credit card company. A lot of people wouldn't have made that type of jump. I mean, what made you got you to that point? Like, yeah, I'm going to do this.
So first of all, you know, I was 23 years old. I had no wife, no kids, no major financial obligations. At the end of the day, it was a $15,000, you know, risk. Right. And although that was so much money, it's still $15,000 is a lot of money. And to a 23-year-old kid who's never made real money in his life, that was like, holy cow. It was a big mountain that I had to surmount. But at the end of the day, it was $15,000. And if I had to move back in with my parents, or, you know, like go down that, I didn't have any major risks. So that was one thing. And then the other thing I've realized now, I actually had this conversation this past week with somebody who I was kind of mentoring on real estate. He's got a day job, he's got kids, he's got a wife, and he wholesales houses full time and wants to get into apartment buildings. And so he comes to me and he's like, Tim, like, what should I do? And I said, listen, man, I don't know your entire situation, but tell me this: how much do you make from wholesaling houses, and how much do you make in your full time job? Like, what's the ratio? He goes, well, I make it's about 50-50. Like, just as much as I make wholesaling houses part-time is how much I make in my full-time job. So 20 hours versus 44 hours. I said, dude, break it down. If you spend 60 hours wholesaling houses, you're giving yourself a raise, you know, you're increasing your total. Not only are you going to replace your job income, but you're going to have another 20 hours a week to spend with your family. Or if you do double down on that with business, then you're going to give yourself a 50% raise on what you're currently making. I was like, you know, and I joked with him. I was like, but what about that insurance? You know, and he's like, yeah, no, you know, it's $1,000 a month. Like, everybody gets all bent out of shape about insurance. And the reality is, you know, you stroke a check for that and it's not a big deal. But what I found, you know, talking to a lot of people about making the leap, and like me, I just burned the ships. You know, I said, hey, if I'm going to make this thing work, there's no turning back. And I think it's kind of hard to do when you have, you know, a wife and kids, or responsibilities and obligations. If you don't already have something kind of built up, or, you know, he's in a different position. But I also wouldn't let it strangle you. You know, life is pretty short, and the last thing you want to do is be on your deathbed saying, I wish I could have, would have, you know, should have built up that investment company. How much different could my life have been? And what I found is, like, you know, it's all fear, right? And fear is instilled in us because, you know, back when we were, I don't know, in the ice age, we needed to make sure a saber-toothed tiger didn't jump on us and eat us, right? And so, like, there's a real reason to have fear. Today, like we don't have life-threatening things happening to us on a daily basis, you know. So, but we still have that fear that's instilled in us over you know, millennia, and so fear is not. It's not real. Like you're not gonna die if a deal goes south. You know, like, what's the worst thing that could happen? You go bankrupt. Like, that's not fun. But the reality is, you know, people focus so much on the fear. Like, what if the deal doesn't work out? What if I lose money? Well, dude, what if you got crazy rich? You know, what if instead of going bankrupt and worrying about that, what if you built legacy wealth for your family? And your great grandkids, like the Bush family today, looks back at their great grandpa, George Herbert Walker, who drew a line in the sand and became the patriarch of that family, created a business, got into finance. He's got one kid who started the Mets. He's got another kid who married, another business person who then birthed one of the presidents of the United States, who then had another kid who birthed another president. Like, think about that. What if you were the patriarch and the matriarch of your family that everybody pointed to and said it all started because of that person making a decision to build legacy wealth for our family, and how this all spurred out because of it? Like, what about that? What if you were that individual really creating a row of dominoes that changes futures for your family tree forever? That's what I focus on. I focus on that, the difference I can make if I get crazy rich or crazy wealthy, and the causes that I can support, the churches I can give money to, and the hospitals and the kids I can send on trips. Like, that's the kind of thing that I focus on versus what if a deal goes south? What if I lose $10,000? What if, I go bankrupt? But at the end of the day, that would be terrible. But as we talked about earlier in the show, once you have that basis of knowledge, you can get it all going again pretty quickly. There's a lot of people that I know who lost everything in 2008, 2009, and are coming back with a vengeance, even harder, building up their net worth by 2x, 3x, 5x of what they did before, even going through that, because they already have the skill set. So I just don't focus on the fearful stuff. I focus on the faithful stuff. Faith and fear are the exact same thing. They're both believing in something that has not yet occurred. The difference is one's positive, one's negative. And the cool thing about that is we get to choose whether we want to be positive or we want to be negative. So why not be positive, right?
Well, that's really powerful. And you kind of glimpsed on it there, but you're basically talking about building a business around your lifestyle. I mean, what you choose to, the life you want to live.
Mm-hmm. Big time. I think a lot of times we go and we think we need to burn the midnight oils, and we have to burn the candle at both ends. And I read a book about a year and a half ago that said something. What the quote in the book, my biggest takeaway was, it said that the truest indicator of your priorities is where you spend your time. Mm-hmm. And I think if a lot of people reflected on where they spent their time, they would realize that, like, it's not what they're saying is a priority is not really a priority, And so they're spending their time at work all day, every day. They're not present with their kids or their family, and they're on their phone and they're doing all this other stuff. And versus being with their family, like everybody says, family first, or faith, or something other than business. Business usually comes down the line, or finances come down the line. But if you take a look at where they're spending their time, it looks like business and finances come before everything else. And so I found myself kind of doing that about a year and a half ago, and reflected hard on my circumstances and what I was doing. And, my daughter, my 3-year-old, or she was 2 years old at the time, came up to me after dinner, and I'm texting on my phone. She's tugging on my shoulder saying, Daddy, come play with me. And I kind of dismissed her and told her to go play, and I'd be over there in a minute. And then I finished sending a text message, because I was texting at the time. And I look down at my phone after I send the message. I look at my daughter playing by herself, and I look at my phone, and it's a message that was not urgent, and it wasn't even important. Mm-hmm. And if I wouldn't have even sent it, it probably wouldn't have even mattered. And I sat back, and I'm like, what am I doing? Like, I'm imprinting on my daughter that the man who loves her more than anybody else in the entire world just neglected her, just ignored her. And now when she comes to Daddy for love and support and affection, she starts, instead of associating me with those things, she starts associating me with disappointment, and being ignored. And now what does that do when she's at dating age? Now instead of coming to me for love and support and affection, she goes and finds it with drugs, or through sex, or through dating some jerk who ignores her because she thinks that that's what love is, and it was such a punch in the gut. But I'm also thankful that it came across when she was 2 and not when she's 22. Mm-hmm. And I made a very definitive effort at that point to time block. And this has been a major tool that I've used in my life in the past year and a half. And just like I'm time blocking time to be on this podcast right now, I wouldn't pick up a phone. I wouldn't double book. So I do that if we do it for work, why don't we do it for our family? Mm-hmm. And so I time block my evenings, from 4:30 on to only be with my family. I get home, I take the phone, I put it upstairs. So that way it's not even a temptation. And then I go and I spend time with my wife and my kids, and we hang out, we play, and I'm very present. And I do that every single night of the week, except for when I'm traveling, obviously. And so if somebody asked me to go to a Real Estate Investors Association meeting or a networking event or grab a happy hour cocktail and shoot the breeze, I say, hey, I'm sorry, I can't do that. I have an appointment. I'm already booked. It's with my wife and my kids. I'm going to go spend time with my wife and kids. And I know a lot of people in business. My daughter's waving at me through the window right now. So I'm at home right now. Actually, I'm down in Florida. I'm from Ohio. I got a house down in Florida. I'm hanging out down here for 2 months. Just kind of staying in my lifestyle, lifestyling it up because I can do my business from anywhere I want as long as I have phone and internet. And but I built it that way. To your point, Jack, I've been intentional about building my business around my lifestyle. And so I know a lot of people say, hey, I can't not pick up the phone in the evenings or on the weekends or whatever that looks like. And the reality is I've had like clients, private money lenders, people I've done business with, vendors who said, hey man, I really appreciate you. And they know not to call me after 5 o'clock because they know that they're not going to get an answer. So my team knows that, everybody knows that. And what it's done is I've had people come up to me and say, hey, I respect the heck out of you so much for what you do. And I want to do more business with you because of it, because I know that it's not about making an extra buck. Like you have your priorities straight where relationships are more important than making money. And so I've actually gotten more business because of it. I've attracted people who have similar priorities. And so I like hanging out with those people more, versus the person who will burn you that just for a couple of bucks. And it's made me ask myself questions about how I can run my business more efficiently. What people can I put in place? What processes can I put in place? So that way I can accomplish like the reality is I'm in my office probably 25 hours a week, and we're growing like crazy on this insane trajectory. That doesn't mean I'm not working or I'm not at home or I'm not taking some phone calls otherwise, but instead of working 60, 70 hours a week, how have I been able to do that in 30 to 35 hours a week with half the amount of time? It makes you that much more efficient. It makes you put better systems in place, better processes in place, better team in place, and build this thing out in a way that, again, what if I have half of a watermelon or a quarter of a watermelon instead of 100% of a grape with me doing all the work and having all the stress and all the headaches? It's a lot easier and more fun to build a big business than it is to run a small business.
Mm-hmm. You're just saying this at the right time for me, because I've been finding that, the concept of everybody has to find their why. Why are you doing this, and what's your purpose associated with this? But I've always been struggling with that concept of if your why is your friends and family and establishing those relationships, then why would you let your business interfere with that quality time? Mm-hmm. That's the whole end goal. So it's funny you say that, because I've been starting to put the cell phone in another room when I'm home. That stuff can wait. I know I'm getting emails and texts and what have you, but I have yet to have anything burned down because I waited an hour or two to get back to them.
Right. And Jack, even if it does burn down, the insurance agent's not even open in the evening anyways,
Exactly.
Like that's what I realized, because my building burned down at 5:05 in the afternoon. And I was like, I couldn't even file a claim until the next day. And so that 30 unit had to wait until the next day for me to file a claim. So worst case scenario, think about that. It's, hey, doesn't even matter. Nobody else is working anyways. Why do I feel an obligation to work? So no, that's awesome. That's really powerful and wise of you to reflect on that as well.
Yeah, no, I really appreciate hearing it. I mean, I think that's a lot of people miss that. You establish that why, and then you let the day-to-day grind interfere with it.
Uh-huh. Or they tell themselves, I don't think it's a lie. I just think it's a skewed view maybe, but they say, hey, I'm doing this for my family. Right. The reality is, would your kids rather have you at at their dance recital, or making an extra $1 million, or making an extra $100,000, whatever the number is. And the reality is they'd rather have you at their dance recital. They'd rather have you at the soccer game, at the basketball game, or whatever their activity is, or spending time with them, or playing at the playground with them. That's the stuff that they're going to remember. And so I'm not saying that finances aren't important. Finance, like making money, is right up there with oxygen, right?
Right.
And so it's an important piece of the pie because it gives you more options. If you don't have money, you can't spend more time. But the reality is you should never neglect your family time, and by time blocking, like what I've done, it's been so mind-boggling and eye-opening to me of what it's done for my business. I've been able to grow my business by working less in it, again, because I ask myself questions that then lead to better answers, like, how can I spend time with my family? Well, working less. Okay, now how can I work less? Well, if I had this person in place and trained to do this activity, then it would buy me back another 20 hours a week, or buy me back another blah, blah, blah. Or if I had somebody. And so I'm trying to figure out how I can work absolutely not at all in my business now.
Mm-hmm.
And I think I'm going to become a billionaire if I'm able to do that,
Oh, yeah.
So it's one of those things, like you can't just not work, and you have to ask yourself the right questions in order to, be resourceful in that regard of figuring out, what things you can put in place. So it's just working smarter versus working harder.
Right. Well, I can keep talking to you on and on about this, but I guess I'd be remiss if I don't ask you, getting back to the commercial investing, just briefly here, because that's what people are really going to want to hear. So, I think would be a good transition is, and we're probably running out of time here, but
I got time, man. Whatever you need me for. So I'm willing to help hang out, and I like our conversations.
So, well, that's great. Because I think what my next question is going to be then, and you can probably expound on this quite a bit, is, people are typically the path of or progression when it comes to real estate investing is most of us have fallen into this. We read Rich Dad, Poor Dad. We start with single family homes. We might dabble in duplexes up to fourplexes. And you're always looking at commercial real estate, multifamilies. That's always on the horizon. Can you give me like top 3 actions or that they should take regarding commercial real estate investing?
Yeah. So, I got into real estate primarily because of the residual income and the passive income and the allure of those things. I think a lot of people do, right? We all want that mailbox money. Mm-hmm. And so I think we all get into real estate for the idea and the concept of that residual income. And then we think we have to go stockpile a bunch of cash of our own in order to go and invest in those things. Mm-hmm. What's amazing is how upside down commercial real estate is compared to residential real estate. And what I mean by that is residential real estate, there's a lot of red tape and rules and regulations and all these things in place to protect, the little old lady who inherited a property from her husband who just passed away, and she's never dealt with anything in finances before. They need to make sure that some big bad real estate investor or real estate agent doesn't take advantage of her. So there's a lot of things taken to protect these unsophisticated landowners in the residential realm. Now, when you get into the commercial real estate realm, it's kind of like the wild, wild west, meaning everybody's assumed to be a sophisticated investor. If you're buying for investment purposes, you probably know something about, return on investment and money in, money out, income statements, all those kinds of different things. And so it's a lot different. So what's crazy is like residential real estate, usually you cannot assign a contract. Commercial real estate, it's assumed that you're going to create a new LLC and then assign the contract into a new entity once you buy it. Residential real estate, all sorts of red tape, and they care about the borrower when you're getting a loan. Commercial real estate, they care only about the asset. Majority about the asset. There's still a little bit of things to balance out and things that they're going to look at. I'd say 90% about the asset, 10% about the borrower. In residential, it's completely opposite. It's 90% about the borrower, 10% about the asset. With realtors, for instance, the reason you say you don't see many commercial real estate deals trading like you do on residential is residential real estate agents have to list their properties within 72 hours. At least that's how it is in Ohio. In the commercial side, a commercial real estate agent does not need to list their property within 70. They don't have to list it at all. And that's why they keep a pocket listing and they shop it around to all these different, the top 20 buyers in town, because they want to earn both sides of the commission as a pocket listing. And so if you see it hit the MLS, it's usually a pretty crappy deal, Or if you see it hit LoopNet, it's probably a pretty bad deal because of that. So, and again, it's also, and let me back up to this one is, in residential real estate, you're supposed to be bringing the down payment money. In commercial real estate, it's assumed that you're going to go and raise all the down payment money from investors. So it's a different mindset, and it's easier for me to go buy a $5 million apartment building than it is to buy a $500,000 single family home. As crazy as that is, right? The financing is easier. The terms are easier. There's not as much hoops to jump through and all this nonsense that the banks run you through. And it's more exciting, and it's easier to get somebody to cut a check for $100,000 than it is for $10,000. Because a person who's only got $10,000, that might be all the money that they have, and they're always asking questions about it. They want an update every other day on the money and what's going on with the project and all these different things. The person who's stroking a check for $100,000, $200,000, they're probably some successful entrepreneur who just launched a product, they sold their business, they're starting a new company, they got a million other things going on. They're too busy to follow up with you and ask you about what's going on every other day. So as long as they get their ACH deposit every month and an update quarterly, that's all they care about. So it's easier to do bigger deals than it is to do smaller deals. But going back to your original question, is like, what is the top handful of things that somebody can do in order to be successful? I think in all real estate, but specifically in commercial real estate, is there's really two things you got to get really good at in all real estate. One is finding money, finding private capital to invest in projects, and number two is finding deals. So like right now, it's a lot harder to find deals than it is to find money, right? We're in a hot market, deals are getting eaten up real quick. So if you can find deals, off-market deals, direct-to-seller deals, great investment opportunities, you have an edge, a leg up on the competition. Now, if you look at the market 6 years ago, deals were everywhere, and it was impossible to find money. Nobody wanted to put money into real estate because of what the news was saying about real estate. Run. And so, if you have those two skill sets, finding deals and finding money, and you can master those two things, you can succeed in real estate regardless of what the economy looks like, regardless of what the market looks like. The third thing that I would add in there is you got to find a mentor or a mastermind to plug into. And, Think and Grow Rich brought up the idea of mastermind 100 years ago. And it's, like-minded business entrepreneurs, growth-oriented individuals sitting around a table, talking about business, talking about life, talking about reaching those next levels. And by plugging into a mastermind, that's what the major trigger was for me 3 years ago. Was actually about 4 years ago. It totally changed my mindset. It totally changed my mind on my philosophy on what was possible, the heights that I could achieve, the heights I could reach, the portfolio that I could build. All those different kinds of things changed once I went to a mastermind. And what you'll find is people go out to like a one-time event, and it helps push them through that ceiling that they're hitting right then and there. But what they don't realize is that every level has a different level of problems too. Like, hey, if I can only make $100,000 a year, yeah, but there's another level of problems once you hit $100,000 a year, and you need somebody to help push you through that. Then, hitting that $500,000 a year in income, there's another level of problems and things that, and then hitting $1 million a year in net income, and hitting a $10 million net worth and a $100 million net worth. All those things come with different levels of problems, and some of them are good problems. Some of them's, how do I put an estate plan together and trust work and all these things to make sure my family's taken care of, and how do I reduce my taxes, my tax liability, and what, some of them are things like that. And then other things are bad problems. All of a sudden, when you're worth tens of millions of dollars And you got a target on your back. People are going to start suing you just because they know that you'll write a check to tell them to go away. And so you got to make a decision. Do I write that check? Is it worth it to do that? Or do I fight the hell out of this thing, spend 4 to 5 times as much as that would cost me to write that check, but then I build a reputation in town where nobody will ever bother me again because they know I'll fight the hell out of any lawsuit that comes against me. That's unsubstantiated, So, again, there's good problems and bad problems. What do you do when you reach those different things? If you don't have a mastermind or something that you're meeting with somebody on a regular, at least quarterly basis, it's a lot of times hard to swallow that pill, and then you get stuck inside your own circumstance. You can't see outside that box that you're in, and it's scary. And so by having a mastermind or having a mentor that you can plug into on a regular basis, it helps push you through those glass ceilings that much faster. When you hit that roadblock or you hit that hurdle, they're able to help offer some solutions, offer some resolutions on how to get you through it that much quicker, make some introductions for you to different resources, all those different kinds of things where makes life just so much easier. I mean, because you're gonna learn the lesson one way or another. The difference is, and you're gonna pay for it one way or another. So it's better to pay a mentor or to join a mastermind and pay that way, where you're more proactive about it versus reactive and losing money and pay for it that way and through time as well. So you'll save money based on what you don't lose by joining a mastermind or hiring a mentor, and you'll save a lot of time too and get you there that much faster. So I would do those 3 things. One is learn how to raise money and be a master at that. Learn how to find deals, become a master at that, and then for all the other business stuff that you're gonna have questions on, join a mastermind or hire a mentor.
Well, and I know that you do educate and provide some of that yourself, right? Through your
I don't do one-on-one mentoring or anything like that. Sure. I mean, I plug in. I'm a member of 5 different masterminds because I believe in them so much. And so I have one that I run locally in Cleveland, Ohio. That's just put 15, 20 entrepreneurs in a room about on a quarterly basis. And then I do coaching on how to scale from residential real estate into commercial real estate. So I do an event about quarterly on that front too, but it's not really for the income of it. It's more to create joint venture partners actually. And just I have a lot of people who, want to send me deals. They want to joint venture on deals with me, or they want to invest with me, or they want to sell me a deal or whatever that looks like. And they want to wholesale deals to me. And so because I had so many people reaching out to me, I just kind of put together a course with some good buddies of mine who have an education business. It's become pretty substantial now. We had 120 people at our event last week, and it's high level. It's not for newbies. It's for people who are successful residential real estate investors who want to then leverage up again into those long-term holds and build that legacy wealth. And so, we've put together an event. It's 3 days, and it's called Commercial Empire. So yeah, if anybody wants to plug in, I appreciate that. CommercialEmpire.com.
Oh, that's great. Where else can they find you or get a hold of you if they have any questions?
Yeah, so I'm pretty active on social media, Facebook. Find me on Facebook, shoot me a message, shoot me a friend request. I put out a lot of free content there. And I'm always doing Facebook Live videos and walking around apartment buildings that I own, talking about the value add process, talking about how I found deals. A lot of times I break down the numbers on different projects that I have going on, so that way people can see the financials of it. So yeah, definitely find me on Facebook. If you want to shoot me a message or got a specific question or anything like that, just shoot me a Facebook message, and I respond to it. It's not some, machine or an assistant or anything like that responds. I'm actually responding to my Facebook messages and all that kind of stuff. So yeah, I appreciate that. And then I have a website, CLE Turnkey.com. And, I write a lot of blogs and stuff on there, and I'm on a few different podcasts. So I put all those on my website as well. And so if anybody ever wants to plug in there, and, we talk a little bit about what we do and how we do it and how we raise money and the different kinds of deals that we look into and all those kinds of things. So there's a couple different resources there for you too.
Well, like I said, I can't thank you enough for giving me some time today. I know you, it sounds like your little one is waiting for you waving at you through the window there, right?
Yeah, she's a sweetie.
California. No, you're in Florida.
I'm in Florida. Yep.
So, yeah, the weather has to be a lot better down there than it is here right now.
Yeah, the up in Cleveland, they're getting crushed with like record lows. It's supposed to be a high of 0, I think, on like Wednesday or something. So
I don't know if you know this or if they told you, but I'm actually located in Fargo, North Dakota.
Holy smokes!
And,
so you guys get a lot of snow up there.
Yeah, we have right now the forecast on Wednesday we're supposed to have a high of -22.
Wow.
So we're bracing ourselves for a cold snap here. Right now.
Wow. Well, you guys are so friendly up there. You guys can deal with it. You know, in Cleveland or New York, they can't deal with that stuff.
So no, you enjoy your warm weather. And
I appreciate it, man.
I can't thank you enough. There was a lot of great content, a lot of great information, especially around mindset, and I can't stress how important that part of the business is.
Absolutely. Jack, I appreciate you having me on here. Thank you so much. Appreciate all the value that you give and all these podcasts. So thank you for everything that you do, and thank you for making a difference.
Well, thanks for your time again. We'll hope to talk to you again soon.
Thanks, Jack.
All right, that was Jack's interview with Tim Bratz. Appreciate him calling in and putting the time in to give us a lot of great material. And we put some effort into this content as well. So if you found value, we'd love a small donation. You can head over to patreon.com/REIRookies. And if you have any thoughts or questions, shoot us an email at info@REIRookies.com. You can also find us on Facebook, Instagram, and Twitter at REIRookies. And if you like what you're hearing, please head over to iTunes, subscribe, rate, and review the podcast. It really helps other rookie investors out there find the show. And remember, get off the bench and get into the game. We'll see you next time. This episode is brought to you by FargoTurnkey.com. Do you live in a good cash flowing market? If so, Turnkey isn't the best choice for you. You should buy in your market. If you don't live in a great market for investors, where can you find profitable cash flowing properties? We love the Midwest, where prices are reasonable and the people are great. Ever heard of North Dakota Nice or see the movie Fargo? That's where we live. We personally invest here and have lived here all of our lives. How does Turnkey work? We find the property, we rehab the property, we find you a tenant and place you under the care of our local property manager, who we trust with all our own investment properties. I'm sure you have questions about how the process works and what to do next. If that's the case, fill out the form on FargoTurnkey.com and we'll reach out to see if you are a good fit for our business. We have a limited supply of properties every month, so we can sell only to a few qualified buyers. See you at FargoTurnkey.com.
I don't like to tell a man what to do with his money, but if you ain't investing in property, then you're dumber than a dummy.
I'm not dumb. I'm smart.
Well, buy property. That's my advice.